What's going on, guys? In this video, we're going to be touching on important news related to the cryptocurrency and financial markets. We're going to talk about 4 key things that happened in the last couple of weeks that you should know about, and all these news are affecting in one way or another the cryptocurrency or financial markets. Before starting, don't forget to smash that like button. First, we're going to cover a tweet that Elon Musk made that skyrocketed a fake McDonald's cryptocurrency called Grimace Coin. Then we're going to talk about a country that decided to adopt Bitcoin as one of their legal tenders, which is El Salvador, and how in perspective with their reserves and amount of investments, Bitcoin or the amount of Bitcoin that they're currently investing on is not as risky as people may be saying. And this may just be a way of diversifying their assets by including some more volatile assets on their balance sheet. And what other countries may be accepting Bitcoin as their legal tender. Then we're going to talk about Robinhood, which posted a 423 million of net loss in the last quarter, and we're going to be touching on what may be causing this. Finally, if you stay until the end, we're going to talk about the Biden administration and their plans on creating an executive order that will affect cryptocurrency policy in the US. So first, it is incredible to see how a tweet from Elon Musk can move the cryptocurrency market. On January the 25th, Elon Musk tweeted, "I will eat a Happy Meal on TV if McDonald's accepts Dogecoin." And to that, McDonald's responded, "Only if Tesla accepts Grimace Coin," which is this fluffy purple dude over here. And now I'm going to show you what happened to the price, but that may not be the same Grimace Coin. And I will explain that in a second. So if we go to PancakeSwap, we can see that it ended up trading from about $2.76 and it went up to $12. And then it's been declining ever since. As you can see, some people may have 10x their money because if they got it at $1.22, when the coin came out on January 26th, which, it's good to point out because it's after the tweet, it went up to $12. So yeah, they made at least 10x. And you may ask now, right after the tweet is when we're able to find any data from this coin on PancakeSwap. So why is that? Well, apparently there was another Grimace coin that jumped 285,000% after McDonald's Tesla joke. So here's the interesting part. Many of those coins probably did not exist before that tweet. So according to this article, on Wednesday, right after Wednesday tweet, there were nearly 10 Grimace coins on the Binance Smart Chain network alone. That means that there are probably a bunch of other Grimace coins outside this network. And here's the issue. Anyone can call a smart contract and issue tokens on the BSC network and other blockchains for a few cents. And the presence of decentralized exchanges means tokens can instantly be issued, supplied with liquidity, and traded soon after. It seems that it's so easy to create new tokens based on any other token on these blockchains, such as the Binance Smart Chain, that you might expect any kind of token trying to explode a trend or anything that is going on in the world. Do you guys remember the Squid Game series, which basically was one of the biggest hits that Netflix has had ever? Well, there is a token for that, and you can see that it probably started even trading at less than 2 cents, but this is the data that CoinMarketCap has, but it went from 2 cents up to pretty much $90, and then it crashed. So imagine the people that thought, oh, this is a Squid Game token, this is amazing, it's gonna do amazing because the series is so good and everybody loves it. Well, imagine buying it at $35 and then not being able to sell it for more than a penny. I guess that the point of this is that I'm sure that there's going to be a bunch of more coins based on new trends that may end up being a rug pull, just like the Squid Game token did. So you have to be careful on which tokens you buy and make sure you do your due diligence to make sure that you're not buying any random token. And again, I think that what we can learn from this is that anyone can create any token with any name. So you need to make sure that even from the source you're buying it from is the actual token that you want to buy. So now let's talk about El Salvador. El Salvador is the first country in the world to accept Bitcoin as a legal tender, meaning that you can pay Bitcoin just as if it was any other currency in a local country. I haven't done it, but that would mean that you can just go and buy a house with Bitcoin, you can go and buy a car with Bitcoin, anything, you can buy it with Bitcoin over there. Well, according to their law. And not only that, but it's known that they have been investing a lot of money, basically from the country as state-owned money, to buy Bitcoin. They have been criticized, especially by the IMF, which is the International Monetary Fund, which basically urges El Salvador to end its embrace of crypto as Bitcoin tumbles. They basically explain that having Bitcoin as a legal tender, it entails large risks for financial and market integrity, and financial stability and consumer protection. Now, this is a big issue because accepting Bitcoin, again, you can do a lot of stuff in that country. If you accept Bitcoin, then you are giving a wallet to a lot of people who do not have bank accounts. So basically, you are giving them power to buy stuff and have like a bank account, right? Because it's a crypto wallet to buy stuff and to transfer money. That's not the point of this segment. I want to talk more about the risks that they're having on just only holding Bitcoin. So here's what I want to compare. El Salvador current reserves are at $3 billion according to data from the World Bank. So in the last couple of years, their reserves have been increasing. In 2019, they were $4.4 billion, and in 2020 is $3.0 billion. Okay, so for the sake of this argument, let's assume that they have $3 billion on their reserves. Now, according to this source, which is bitcointreasuries.net, shows a bunch of institutions and companies and countries and how much Bitcoin they currently own. For example, MicroStrategy LLC, which is a public company, they currently own 125,000 Bitcoins for a total value of $4 billion. Tesla owns 43,000 Bitcoins for a total value of $1.6 billion. From this list, we can also see El Salvador that currently owns 1,691 Bitcoins for a total of $63 million. I mean, and also as a comparison to other institutions is a lot less than Tesla and MicroStrategy. Even Square Inc. owns Bitcoin. Okay, so if we do a quick calculation on what percentage of their portfolio of reserves is invested in Bitcoin, is when we see that it's not that much. So doing a quick calculation of $3 billion, $63 million is only 2.11%. Okay, so if we compare that proportion, it is very similar to what Fidelity is currently proposing to do with their client. They basically want to create a portfolio exposed to Bitcoin, and they are aiming at a similar amount of exposure. So according to this article, Chris Pepper, Vice President of Corporate Affairs at Fidelity, said that subject to regulatory approval, the all-in-one balanced fund will have an allocation of approximately 2% to the Bitcoin fund, while the growth fund's Bitcoin allocation will be around 3%. Fidelity is filing a prospectus amendments in the next 10 days, he said. My point here is that an exposure of 2.5% of your portfolio, I don't believe it's a huge exposure or like a reckless exposure. Of course, it will depend on the investor, but looking at it as an investment, I don't think that 2% is that big. Now, about El Salvador becoming a legal tender of Bitcoin, then that's another subject. Now, talking about legal tenders, I found this article that tries to predict who are the next countries to accept Bitcoin as a legal tender. So I found it extremely interesting because it talks about the countries and people are basically voting on which countries they think that they're going to accept it. And the top of the list is Paraguay with 552,000 votes, then Venezuela, Anguilla, United States, Panama, India, Zimbabwe, Brazil, Ecuador, and Mexico. Again, there's 552,000 people that think that Paraguay will be the next, and 438,000 people that Venezuela will be the next. Okay, now talking about Robinhood, they have not been performing amazingly well. Their stock value has been decreasing pretty much after their IPO. It got to a peak of around $55 and is now trading at $13. And in general, an all-time decrease of 60% in price since their IPO. I mean, they're known for pioneering commission-free trades of ETFs, stocks, and cryptocurrencies via a mobile app in 2015. Their main source of revenue comes from interest earned on customers' cash balances, margin lending, and selling order information to high-frequency traders, a practice for which the SEC opened an investigation for, in which they could pay a fine exceeding the $10 million, and they're basically facing a civil fraud investigation over its early failure to fully disclose its practice of selling clients' orders to high-speed trading firms. People familiar with the matter said. So they will basically allow you to trade for free, and then they will sell your information to high-frequency traders so they can basically take your trade. That's what I understand from it. But now, if we look at their financials, we can see that they have a net loss of $423 million. And that's 3,348% higher than previous year. I mean, which is a lot. It also seems that their costs during the fourth quarter increased by 162% from previous year. And according to the CFO on a call that they have with reporters, he attributed much of the costs to shared-based compensation and increasing headcount. And here the stat that I wanted to show you is that transaction-based revenue from cryptocurrencies jumped 304% to 48 million in the fourth quarter, while revenue from equity trading declined 35% to 52 million. So these stats mean two things. First, that the revenue coming from cryptocurrency trading is almost as much as the revenue coming from equity trading. And also the revenue coming from cryptocurrency trading has increased by a lot, while at the same time, the amount of money coming from equity trading has decreased. I just found this very interesting because that means that there's more demand for cryptocurrency trading, and for this app that is targeted to younger demographics, that kind of makes sense. The only concern is that when you trade equities, you're trading in big markets, meaning companies that have to file a lot of reporting to the SEC. If you're trading cryptocurrencies, again, there's not a lot of regulation for them, so it's a little bit more risky. And that's a concern for some investors. Now, the other thing is that Robinhood is facing a lot of competition, mainly through other competitors such as Coinbase, FTX, Crypto.com, and many other companies that are getting into the cryptocurrency space. So let's see what happens as the space becomes bigger and more mainstream. So finally, the Biden regulation. Now roughly a $2 trillion digital asset sector, the Biden administration is considering an executive order for federal agencies which would require them to study the crypto industry to provide recommendations on their oversight. That means that Biden basically wants the government to work together to figure out how to treat these new digital assets. And according to this Bloomberg article, the administration is also expected to weigh in on the possibility of the US issuing a government-backed coin known as a central bank digital currency, or CBDC. They're likely to hold on taking a firm position as the Federal Reserve is still considering this issue. And as they mention here, it's just a way of the US to keep track with the world, including, like, for example, China, that they already have like their own private cryptocurrency. And the Fed mentioned that it does not pretend to move forward without the support of the White House and Congress. So it seems that it's time for government institutions to talk about the impact and a wider acceptance of cryptocurrencies as they become more mainstream. These are really exciting news because I believe that the more formalized these crypto assets are, the better, because that means that more institutions and more places are going to accept them and they're going to be more open to payments using cryptocurrencies. If you guys got any value from this video, please don't forget to smash that like button, share, and subscribe to my channel, and I'll see you in the next video.